Welcome to the Osborn Financial Group podcast, hosted by Jarrett Osborn. Join us for expert insights on wealth management strategies, essential tips for securing your financial future, and in-depth discussions on life and health insurance options. Get practical advice for protecting your assets and loved ones, proven strategies for maximizing investments, and real-life examples to illustrate key concepts. Stay tuned for Q&A sessions with industry professionals and actionable steps to take control of your finances and insurance needs. Tune in now and empower your financial journey.
Hello, everyone, and welcome back. Thanks for joining us. Jared, we've talked about most of the major types of insurance out there. We've really done deep dives into these topics. What I thought we would do today is kind of pull everything back and give a more broad overview of the major types of insurance out there. So can you start there? Can you walk us through the four major types of insurance people should know about, right? We have life, health, long-term care, and disability. Just real briefly, what's the basic purpose of each? What's their function?
Yep. So then thanks for another for everybody who's on here. Welcome. So there obviously insurance is a big part of our life, of our out-of-pocket costs on a monthly basis for most people. What I would say is, and a lot of it has to do with, I think, stages of your life. So I would say when you're young and starting a family, okay, whether you have a wife, maybe child on the way, or babies or young children, 100% first thing you need to do is get life insurance. Okay. Life insurance is, the cheapest form, in my opinion, at that stage of your life. What you really need is just a term. Yeah, just a term policy. I would recommend a 20 or 30-year term. Obviously, when you're young, you're typically healthier. So the costs on a, young individual's 20 or 30-year term should not be exorbitant. And in regards to the amount, that's something you have to work with an agent. There's different ideas on how much you should get. But that's the reason why you speak with a professional to lead you in the right direction. You don't want to be underinsured at the same time. You want to be overinsured, and most importantly, you want to make sure it's in your budget. So that's
Jared. Is there a particular? And I know obviously it depends on the person, but is there like a general formula that you typically have for somebody that's looking at a term? Like, let's say they make X per year. Are you looking for them up to a multiple of their income, that kind of thing?
Yeah, I mean that's if you read an article or a book, a lot of times they say 10 to 15 times your income. So if you're making $100,000, $1 million would be a good place to start. And obviously that can some people would rather say, I'd rather get 2 million now, and then so I don't have to keep buying it as I get older. And obviously there's the risk that something happens, you're not as healthy as you are 1 year over. So, but I mean, a good place to start is $1 million, because $1 million, although it's a lot of money, but it's not $1 million is not what it used to be, I mean,
and from what I understand with term insurance, this has at least been my experience, because I can identify with what you said. When I started having kids, that's when I started getting insurance.
Right.
But I know you can get, I mean, obviously if you have good health and optimal factors, we're talking like for $1 million policy. I mean, you could pay as little as, we're talking like hundreds of dollars a month in that neighborhood, maybe less than that. So it's really accessible and affordable for people.
100%. And, for example, a healthy 20 to 25-year-old male or female in good health, it could be, $30, $40 a month,
Wow.
so
that's like a no-brainer.
It's really, I mean, and or more, depending. And so again, these are the type of things you need to, whether it's me or any agent you deal with, there's a lot of, one, the amount, talking with somebody and discussing the amount. And two, based on your health, one carrier may underwrite a specific issue better than the other carrier. One carrier, I just had a situation where the very healthy gentleman, he wasn't a young guy at this point, but he had a family history of heart disease, perfect health. He was perfect health. One carrier looked at his family history a little bit more or less advantageously than another carrier. And so we made the decision to go with the other carrier because he had some family, but he was perfectly healthy and he got a preferred rating. So, these are certain factors you need to, it's not every carrier is the same. Term insurance, it's like buying, a pen, or a piece. It's barring, extenuating circumstances, really it should be based on obviously the quality of the carrier. You want to deal with pretty much A-rated carriers, but it's really, you're really basing it on price. It should be based on price because, like I said, as long as it's, you're getting a preferred rating or whatever, or the carrier deals with your situation the same as another carrier, it should just really based on price at that point.
And speaking of something like term life insurance, obviously you can go out there and you can go on any of these websites and submit an application and do it on your own. If I understand correctly, though, if I were to come to somebody like yourself that deals with this, it's not going to cost me any more if I do that. Is that right or no? Meaning, do you
That's
get
correct.
your commissions are based into the package, so the company pays you from their end. So it makes no sense for me to do it on my own. I can go see you. You're an expert in this field, and you can guide me and help me find the best premiums for my situation. And there's no skin off my back. It doesn't cost me anything.
100%. When you hear all these commercials about, oh, you can go to Ethos or you can go to this one or that one, basically it's a aggregator of insurance carriers. I have the same software. If you go on to one of those online places, they're probably going to put you in touch with an agent anyway. They probably have the agents work with them or third party contracts with agents. But it's really important, and I'm not saying this because I am an agent. There's so many. Once you get into the the process of getting life insurance, it's a little intrusive sometimes. And there are a lot of different things they're going to ask you, not only about your health, but about your driving record, your history, if you've had any legal issues, your bankruptcy, things of that nature. And to navigate that process could be overwhelming for some people. Like I said, it's a little bit intrusive. I always start my conversation with people like, this is not me asking you. This is the insurance company they want to know everything about you. I mean, and rightfully so. They're going to be offering, God forbid something happens to you, it could be $1 million+ that they're on the hook for. So
they need to do their due diligence.
Yes.
Sure.
So that's, and some there are some carriers that will require like a paramedical, they call it, like blood work or some sort of medical exam. There's some carriers that won't require it. I just wrote a policy on somebody for $1 million. Didn't even require blood work. They looked at medical records. They were healthy. They asked some questions that they answered them, and they got the policy preferred. No medical.
Easy peasy. So
Yeah.
talk briefly about, I know you have your term and then you have whole life insurance. When should somebody start, like at what stage should they start looking at whole life insurance? Is that something that works in tandem with term? How does that work?
It could. So, when you talk about whole life, you're talking about permanent insurance. So there's more than just whole life. There's universal life, there's index universal life. There's many different things, and they're a lot more expensive. I don't typically, and I'm maybe a lot different than many. I don't typically show permanent insurance for the death benefit unless it's required because they have a large estate and they need to do some estate planning and throwing a life insurance in a trust, and we won't get into the weeds there.
Yeah.
I believe I'm a big proponent of permanent insurance for more of a retirement plan, where you're actually getting as little amount of death benefit as possible. And, for the amount of premium you put in. And we've kind of had another podcast on that. And again, I don't want to get too much because we only have a certain amount of time, but I'm not a big proponent of getting permanent insurance for death benefit unless it's because you have an estate issue, because your estate is very large. I'm more for it because there are certain tax benefits, retirement tax benefits to them. And so that discussion typically will happen a little later, if I know their financial situation and I see, hey, this could be something for you, or another avenue or area that permanent insurance may be good for, or certain high, like doctors and lawyers, people who need to protect their assets, life insurance is an asset protected vehicle. Okay, so creditors typically can't come after you or for your life insurance. So if you have a permanent life insurance policy, you built up a lot of cash value into it, because you've put money in over the years. Creditors can't come after. So I do a lot of doctors who have a bullseye on them, because people are litigious, malpractice, things of that nature. They buy big life insurance policies, because one, if structured correctly, they're a safe investment, and two, they can't be attacked by creditors. They're actually it's a great asset protection vehicle.
Yeah, it seems like it's just another arrow in the quiver if you're in a position where you're building wealth. This is just
Correct.
another product that you can mix into the equation to help protect you moving forward. So let's shift over to health insurance for a minute. Obviously, health insurance feels like a no-brainer because we've all dealt with it before, but it can be wildly confusing. And we talked about this in length before. I've had my own experiences in the health insurance world, and it's been head turning for me. What should the average person look for when choosing a health plan?
Yeah, I mean, first of all, so if you're dealing with group, you're usually offered a plan or two or three, and that's typically a little bit better coverage than individual insurance when you don't work for a company or you don't have a group policy. But basically, the most, obviously the benefits, and the cost, and which could be very high these days, but also the network, which is very important these days, because when you see what's out there, especially on the individual markets, whether it be Florida or any other state, because I deal with more than just Florida where I live, I deal with other states. A lot of these carriers are offering policies. They look good from a price standpoint, but the networks are really skinny. They're limited networks, and it creates a problem if you're not dealing with somebody who knows doing, because they'll say, "Oh, this looks great. It's whatever, Blue Cross Blue Shield, or and the price looks great."
Yeah, but then when you have a problem and you can't find a good doctor, or you're kind of
and you didn't check to see if your doctor's accepted.
No, I was going to say, especially, this is kind of one of the things that was on my mind when looking for insurance and trying to gauge the monthly investment on the policy versus what you have access to. Like if you do end up getting some kind of horrible, catastrophic, like cancer situation, like obviously you're going to want to go see the best cancer doctor. It's my understanding that a lot of these plans, they're just not in your network. You have no access. And if you want to see them, then you're going to pay hundreds of thousands of dollars out of pocket. Right.
That's absolutely correct. And that's a big, like I always tell people, like, look, the benefit, and also, the plans now are the higher copays, they're higher deductibles. And so you're paying a lot for something that you're going to most likely use, and you're going to be paying more out of pocket when you use it. And if that's the case, you want to make sure that you have access to your doctors. Now, if you choose a plan that has a skinny network, but your doctors in your area, in your hospital takes it, I always tell people, look, as long as you understand that you're not going to be able to go see, a doctor, in New York because you live in Florida because it's an HMO or whatever, or there's certain limitations to the network, but your doctor's accepted and you're okay with that, that plan is fine. Okay. There's a lot of people who, like you said, they have cancer or they want to see specific doctors. And believe it or not, a huge portion of the premium you're paying in these days is for the network. It's exorbitant. Like, I'm not going to start talking about specific carriers, but there's a carrier in Florida that has the largest network. And then there are a lot of carriers in Florida that have very skinny networks, and the variance, the delta between the rates could be 50, 60, 70%. I mean, I just quoted a family for that carrier that has the very robust network. Okay. Family of four in their 40s, $3,500 a month.
Whew.
Yeah. And this is without a subsidy if you can get one on the exchanges. And then I quoted another carrier, which had a, skinnier network, decent, benefits were similar, $2,500. Granted, it's still expensive. They're 40, they had a family of four, but $1,000 a month. I mean, you're talking, 30 something percent. And the benefits are almost identical, but the network on the one carrier was that much more robust than the other carrier. And you can see that difference. And It's a problem, in my opinion. I mean, obviously, cost with health insurance is a problem, but the networks really, I mean, you really, because people just go online if they don't have somebody to help them. They say, oh, yeah, that looks great. They don't check their doctors, or if they do, that's fine. They should. They also need to check prescriptions. That's huge. I mean, prescriptions could be a major, if you're taking generics, that's fine. But if you have a brand name or specialty medication, you better make sure your plan covers that medication, because that can get very costly. So,
like we said earlier, very, very, very confusing.
yes,
And it just seems to be getting more complicated and more confusing and more difficult for coverage the sicker people get in the country.
yeah,
Obviously, people need to think about prevention before these things happen, like making sure you're seeing your doctor regularly for checkups, making sure you're exercising, making sure you're eating well. Like, if you do all those things, well, guess what? You're going to be healthier. You're going to have less need for insurance, and the prices are going to come down.
absolutely. And that's another thing that these companies, they have wellness programs now. Most of these they want you to go online and put in these things, and a lot of times these carriers will have outreach programs to make sure you're getting your preventative or your wellness checks. Some of them have relationships with gym membership. So, and even on the life insurance side, they're starting to do that. So you're seeing them being a little bit more engaging with the insured, because one, for selfish reasons, but good reasons. I mean, selfish because they don't have to pay large claim if you're sick, and obviously if you're going to get your preventative and exercising, those things are going to be you're not going to have those as many issues, hopefully. And secondly, they don't want to have a large claim. I
Yeah.
mean, and it helps the insured too, because one, they're healthier, and two, if they have a large claim, it's typically there's a deductible and a lot more cost to the insured. So I think it's a good thing. It's Most people just are so busy, they don't have time for this. Like like we all, it's the same thing. Like we all get busy, and they don't want to go online, and I find myself doing the same thing. I have it with my insurance, and I mean, I might go online and doing I do some things, but you get caught up with your life, but they are there for most insurance companies do offer those things, those wellness programs these days.
What about long-term care? That's one of those that, again, they've heard the term, but it's not something that's typically on their mind until they get older. When is the right time to start thinking about long-term care, if at all? I mean, depends on the person, obviously.
I mean, really, if you just ask, like you just asked me that, I would say 50 years old is when you should start looking at it, between 50 and 55. Now,
I'm getting close.
I have clients. Yeah, and I have clients. I just had a husband and wife who have dealt with the situation recently with their parents. They're 40 in their late 40s, and we're like, you know what? We had such a nightmare dealing with it because my parents who they were dealing with didn't have long-term care, and we want to get it now. Well, I don't think it's a bad idea, as long as they understand that, they're typically healthier, two, it's going to cost them less. Now they'll have to pay for many more years because they're starting younger, but I don't think it's a bad idea that even for certain situations, if you have family history of things, if you've recently dealt with a situation, which I always get that call probably once a week or every 2 weeks. Oh, do you do long-term care? I just had to deal with my parent. I want to start looking at this. So I would say 50, but maybe even a little younger if if you have some extenuating circumstances where you have family history or you've dealt with some situations and you want to kind of just at least take a look at it for now. Because the costs on these, the cost of care is going up every year. I mean, you're talking about, if you need, home health care or a decent assisted living facility, $8,000 to $15,000 a month. I mean, so
Jesus.
That's when you start looking at it. And, we've had a podcast on the different types, and, it's not necessarily a cheap insurance. Okay. But it should be if you have assets, and I'm not talking tens of millions of dollars, you don't need long-term care if you have $10 million. You can self-insure. But I'm talking you have millions of dollars saved, or you plan on, getting there. You're 50 and you're doing well and you're putting money away. It should be part of every estate plan. There's no doubt, especially in today's world with costs going up. We're living longer, but not necessarily healthier. you know? And so, these things are a necessary evil. It's just, now we can kind of segue into probably the next thing is disability insurance.
Yep.
I would say that disability insurance, which is income replacement, if something were to happen to you, if you become disabled, or even whether it be a long-term disability or short-term disability, a lot of times it's offered at work, if you work for a company. If not,
let me interject real quick so I
yeah.
don't lose my thought. I could personally speak to this, not for me, but my best friend. I think I may have alluded to this earlier. He's been on disability for a while. He had a rare autoimmune disorder. He was working in the mortgage industry, doing the grind, and he was really, really ill. Thankfully, he had disability insurance tied into his employment, and he's been getting it consistently now for many, many years, and it's been life saving for him. Like, without that income, he'd have his back up against the wall and he'd still be sick, grinding away.
Absolutely.
So
Yeah,
very
I mean,
powerful stuff.
it is. It's very important. We talk about life insurance when you're young. Disability, when you're young should be something, I'm talking about when you start your career. I'm not saying you shouldn't get, when you first start your, but like as you start moving up in your career, hopefully that everybody does, and you start making some decent money, okay, $5, $6, $7, $8,000 a month, even more. You need to start looking at this because it's protecting you, it's protecting your family. Who's going to pay your mortgage especially if you're the primary breadwinner, even if you're not, even if both you and your wife or your wife and you both work, it's something you should look at. Now, like disability insurance is expensive, but it's probably more important than life insurance when you're young, because statistically, the chances of you becoming disabled is a lot greater than you dying when you're young. When you're in your 20s, 30s, 40s, it's significant, the odds. A second thing is, let's just say you get disability and you get, because and disability is a percent, usually 60-70% of your income they're going to insure you for. So if you're making 100, you can get $5 or $6 grand a month, of disability income if you need it. Okay. That's a start. As you start making more money, it's not uncommon to get another policy. I have 4 policies myself because I've grown over the years. I got some when I was very young. I got some, and again, I'm talking my 20s, mid to late 20s. Then in my early 30s, I started making more money. I got more then. And then when I hit 40, I got more then. And then I got a short-term policy through work. So I have 3 long-term and 1 short-term. But it's really something that's fluid. Even your life insurance, going back to life, it's not uncommon to have 3 or 4 different life insurance policies. We talk about your stages of life. These things should be looked at especially when you're young and you're making some money and you're growing your business, or you're in, you work for a company and you're growing and they don't offer, disability insurance. You need to look at these things, add to them if necessary. And disability insurance is, when you apply for it, is more stringent than life insurance. You talk about, intrusive. Disability is very intrusive because it's, think about it, just kind of conceptualize it. Let's just say you get $5,000 a month, which is not a ton in today's world of disability. They're probably making 80 to 90,000. You could probably qualify for 5,000 a month. You're $60,000 a year. You go on disability when you're 30.
Yeah.
Most of these policies pay till age 65 or 67.
Oof, that's a hefty price tag for the insurance.
It's a living death benefit. Yeah, 35 years times 5,000 is close to $2 million that they have to pay you contractually. Okay. And so, that happens. And, talking from experience, you talked about your best friend. My father, who was a physician, went on disability when he was 50. Now, the cool thing about my father was he had arthritic hands. So he couldn't manipulate, patients and stuff like that, but he can promote his practice. Those are called own occupation policies, which I recommend everybody get, as opposed to, something where it's just like, any occupation. What an own occupation policy will say is, if you can't go back doing what you do, but you can go do something else, they will still pay you the disability and you can still get paid, through that other job. So for example, my father, who's a physician, couldn't manipulate. So he couldn't see patients. I mean, examine them through certain things because of his hands, but he could promote his practice. He can do the initial consultation with the client, and he had a doctor on staff to see the patients. So my father, he was able to work still, get paid. He just couldn't see the patients. Okay, so he had a doctor they hired. See the patients he can see them and talk to them about, their situation and, recommend, but he couldn't manipulate. Okay. And so, it's very important. That's another thing, when you talk about disability, that's something you 100% need to speak with. Like term insurance, I would say, although you should speak to an agent because it's not going to cost you any more, any less. Disability, you need to be held. Your hand need to be held. There's a lot of moving parts of disability, and it's based on not only your income, but obviously your health, but your occupation. Every occupation has a specific type of class, and certain carriers won't write certain occupations. So you need to, and there's only probably 6 or 7 real disability carriers left on the market. Same with long-term care. And so you got to make sure you're going with the right carrier. And so, yes, disability is something that you should be getting when you're young. If it's offered through work, the issue with that is it's going to be a lot less expensive. The issue with it being offered for work, unlike typically like life insurance, it's not portable, meaning you can't take it with you. If you leave your work, because it's tied to your income at that job, you can't, if you were to leave, obviously you're losing that income, you're losing that job. And so you can't take it with you. Life insurance is different. If you have life insurance through work, which usually has some limitations, you usually can't get millions of dollars, or sometimes you're even capped out at $500,000. You can take your life insurance with you. Okay. It's portable. It's going to, you pay for it at that point.
You can take your life insurance, but you can't take your disability with you.
Exactly. You can take your life. You can't take your disability. And the disability. So I always tell people when they have it through work, it's fine, but just understand, you may want to look at getting some, if it's doable, and it's going to cost you a few bucks, but you may want to look at getting some personally as well, if you can qualify for it based on your income. So if you're getting offered $5,000 or $6,000 at work, but you're making 200,000, 300,000, 400,000, and you can get more, but you're capped out at work, I would say definitely look at individual insurance, disability insurance, because you're going to need more. And you might as well get it hopefully when you're young and healthy, than waiting and, taking the chance that you're not as healthy. And they really look at everything, mental health, where life insurance, they'll look at mental health, but not as stringently, but they will look at mental health and there's certain limitations on mental health for some of these policies, like 2-year benefit periods, where they'll pay the claim for mental health, but only for a couple of years. Some don't have those limitations. So those are the type of things with disability you got to really look at.
Lots and lots of moving parts.
Yes.
So
Yes.
we'll leave it at that. If you found this content useful, don't forget to like, subscribe, all that fun stuff. If you've had an interesting experience in the insurance world, tell us about it in the comments. We always like to hear your feedback.
And Jeremy, one more thing. We just kind of started tying this all together. Just like your investments, your portfolio of insurances should be looked at every so often, whether it's by an agent.
How often? Like every yearly?
I would say that every few years, especially if you're in a situation where you're in a real growth phase of whether it be a specific job or a business, and you're growing, and your income is growing with it considerably. They should be looked at, especially when you're young, every few years. I would say, regardless of whether you're not, they should be looked at every 2, 3, 4, 5 years. I mean, obviously it depends on the situation, but yeah, just like your homeowners and your auto and all that stuff, it's no different. As a matter of fact, this is just as important, because this is not only it's protecting your whole family, it's protecting your assets. So really,
we do have a tendency to set it and forget it with that kind of stuff.
Yeah.
Right? You don't even realize your auto insurance bumped up like 80%. You're like, why is this so high? You're paying for years. You're like, it's time to reevaluate this stuff.
That's 100%. So yeah, look at these things, and that's what we do. If it's not just, hey, I need new insurance. It's, hey, let's look at what you got. And there could be situations where, and I'm not a big typically fan of replacing things, but I had just kind of give a quick story. I had somebody recently who had term insurance. It was called graded insurance, where it went up every single year. They had no clue. They were young when they got it. It would go up 10, 15% every year. And I go, do you know you have graded a term policy? I had no clue. You want to get a level term policy? No, I said, even though it was a little bit more in the first 2 years to replace it, I said, look at this over time. In 20 years, you had a 20-year term. I said, you're going to be paying thousands of dollars more in the, over time than the few bucks you're going to, I think it was an extra $200 or $300 over the 2 years that it was, the first 2 years extra, as opposed to like $4,000 or $5,000 in 20 years when he, if he kept paying on that graded policy. So you got to look at, a lot of people just, like you said, they forget it. They don't realize what they have or don't have. So you need to look at it and evaluate it, and like anything else, just make sure you're getting the best bang for your buck. That's
absolutely it. Good deal. All right, everyone. Thank you so much for tuning in. We will catch you next time. Everyone, take care and stay healthy out there. We only got this one life to live. Take care of yourself, and let's live it to the fullest.
Yes. Thank you, everybody. Yes. Stay healthy. But like I said, if you have any questions, reach out, and happy to help.
All right. Take care, guys. Bye.
Thanks.
Thanks for tuning in to the Osborn Financial Group podcast. For more financial tips and personal advice, visit us at www.osbornfinancial.com. That's www.osbornfinancial.com. Or give us a call at 954-963-3300. Take charge of your financial future today.